Hi, everybody. This is Lance from ThetaTraders.com. And today I have this exclusive interview with Austin, who made an auto trader for 112 and many other strategies. How you doing, Austin?
Hey, doing great. Thank you so much for having me on this call.
No problem. We're both Texas people here, right? I think
Oh yeah, love
are you
Texas.
more near the Houston area, I think? Or
Yeah,
no?
yeah, I'm North Houston, so it's like 100 degrees here during the day
Yeah.
right now, so it's quite hot.
Yeah, I'm still over in San Antonio too. It's gonna
Okay.
be like 105 tomorrow. So
Wild.
like the heat index felt like Volmageddon a few weeks ago, and
No, yeah,
it's
right.
right.
For sure.
All right, so Austin, I was definitely interested in speaking with you because we have very similar trade methodologies. We both do 112 trades. We've done some other trades as well, like strangles and credit spreads as well. So definitely wanted to spend some time just looking at how our basic trading is, what we've learned from it. There were definitely a lot of learning lessons and a little bit of cost of education a few weeks ago with that Volmageddon, right?
For sure.
All right, so also, if you want to just tell me a little bit about your background in trading, I think I followed you a few years ago where you were doing stuff on like zero DTE type, certain deltas. I know you did a lot of back testing on it. You just want to talk about a little bit about your background and how your trading has evolved over time?
Yeah, of course. So it started back when I was 16 years old, so 2016. And I stumbled across Warren Buffett and I was like, okay, this guy just sits around all day and he just makes money by reading numbers. I was like, I can do that. I'm decent with numbers. And yeah, it's much harder than I originally thought. But that kind of opened my eyes to like, okay, I can invest my money and make it do something for me. And so that's what I loved about it. And then again, once you get into the stock space, especially back then, but also true now, like once you say stocks on YouTube, then like you get ads for every type of
Yeah,
thing ever. And so I was like day trading all this stuff I saw, and I was like, okay, what's all this stuff? So I dabbled in everything. Thankfully, I wasn't old enough to open up a real account yet because you have to be
yeah,
18 to do that. And so I was only paper trading. So I only did stupid day trading for paper trading. But by the time I turned 18, I kind of realized that I like swing trading. So I was just kind of like trading stocks for about a week or so holds. And so I was doing that on very big name ETFs, SPY, oil, things like that, and just trying to catch the trend and did semi well with that. And then my eyes got open to the idea of selling options of like, I can take the same trade based on making money in the same direction, but I have way higher odds of winning because I go further than where the stock currently is when I'm picking a certain strike price. And I was like, oh my gosh, what I'm doing now, but even a higher win rate. I was like, this is awesome.
mhm,
And so I did that. But I started off with defining my risk, so I did a lot of credit spreads, and so with that, I'm very much of a numbers person, and so I was like, all right, what are all the numbers behind credit spreads, and pairing it with trending markets and trending strategies, and so I backtested a bunch of different strategies and really enjoyed that. Until one day I overlooked one crucial factor of early assignment risk in doing credit spreads on stocks.
yeah,
And so I had a thing where I got assigned, and I ended up losing like $10,000, which is fine. It didn't cut off like things like it. My profit still covered that, but it was still an eye opener of like, oh my gosh, there is a risk to this options even when you define your risk.
yeah,
Um, and then so I just started like diving into like, okay, what are other strategies? How can I mitigate risk? And so that kind of moved me into the futures market of selling options on futures, because again, I don't have that assignment risk, at least in the trade, and I also get tax advantages. It's very liquid. I get better buying power usage. And again, once you start doing options on futures, you start learning about things like the 112 strategy, which I was like, oh, wow, this is great. And then again, we have periods where it's like, this is great, like I did with the credit spreads, and then something happens and makes you kind of readjust, which was like the Volmageddon, which just happened. And basically just understanding like, hey, you need to like balance out your things, even like deltas, thetas, things like that. Make sure you're in check, because something like that could happen. But anyways, my journey spanned everything from investing to swing trading to day trading to options, this buying options, selling options, and now I'm a hardcore options seller and mainly on futures.
yeah. It's a long journey and it's a never-ending journey, right?
Yeah, no, never ending.
I know Tom Preston from Tasty Trade says that, and he's one of the founders, said that the people that actually make it in this in the long term are the ones that are constantly learning, constantly
Mhm.
improving on what they're doing. Because the people that are just going to stay doing the same thing over and over again, eventually Mike Tyson will come and give you that uppercut, and it's going to be really hard.
For
Just
sure.
real quick background on me. Growing up, after college, I decided to be a financial advisor. Worked at Ameriprise Financial. They used to be American Express. So I learned all the definitions of options, what a call and what a put is. But we didn't really do any of that with our members. We would just put them in the high, low, 5% mutual funds, and then
Mhm.
just take those commissions and whatnot. So after that, I decided I wanted to be a teacher. Like I definitely wanted to teach other people about money and finances. The financial advising is more of a just marketing sales job where you're just trying to constantly find clients and then you put them in their program and you just let them be pretty much. So I decided to be a high school science teacher and still doing that in my 18th year now. I know my teacher face looks like it's 30 years, but it definitely is very growing. I see a lot of people, mostly high school kids. Some of them are in an investing club we do as well. So I'll teach them some of the basics there. Primarily, I was an investor for quite a bit when I first started teaching, just the no load index funds, ETFs and whatnot. And then once I've owned 100 shares of those stocks, I already knew in the back of my mind what a covered call is. So I decided on really straightforward, very low volatility stocks. I'm just going to sell a covered call above the actual price that I got in my cost basis. And then, it's what I find very interesting is when you're doing a covered call and above the current price, you're actually more conservative than if you're just holding the stock because you're taking in that premium. And then a lot of people have that preconceived notion when you're doing options on options must be super risky and there's no way to make them safer. But there's definitely ways around it. And as you said before, you could have a high win rate. You could go really far out of the money on certain trades. And then it could be possibly more conservative than just buying and holding or swing trading as well.
For
So
sure.
yeah, from there I went from cash secured puts, pretty straightforward, have the funds available for the 100 shares of stock, did that quite a bit, uses up a lot of buying power. So I went into the credit spreads because it uses a lot less. And then I saw how mostly naked puts and strangles usually are more efficient in overall
Mm.
just backtesting trades. So then I looked at futures because futures you could use span margin, have a much lower buying power requirement, not quite as much as spreads in most cases, but it's definitely a lower buying power than the cash secured puts. You could do a notional value on, say, MES, where it's around $25,000, but you might only need about $500-600 to do it. Um, Futures are definitely a double-edged sword, though, as you could probably
Yeah.
be aware. So it does have its pluses and minuses. We both learned that a bit 2 weeks ago during the Volmageddon of Monday, where a lot of these futures products were just going crazy on the bid-ask spread and whatnot. So as both of us could probably attune to just being able to be a constant learner in the markets will keep us very humble at times. So got to make sure that we're staying on top of our game here, right?
Yeah, for sure. Yeah, I'm running back tests like every weekend, just like looking into, especially like Monday. I'm like, okay, let's replay this. What happened? How can we adjust? Yeah, I think yeah, just always testing, all and always learning.
Exactly. What would you say currently, and obviously it could change in the future, but currently, what would you think is your preferred trading strategy? And give a quick reasons why you believe that.
Yeah, so they're going to be short puts on futures. And so I say short puts. Again, I can do just the naked put or the 1-1-2 trade, which is just an advanced short put. And so I love them for a lot of reasons. One, in general, the market goes up. And so by default, I'm betting with that trend that the market will continue up. Most of the time, volatility is overpriced, and you can take advantage of that. And I just love how much return I get with the buying power I put up when I do it on futures. And you can treat it just like a normal stock trade in the sense of like you can put a take profit, you can put a stop loss, and you can kind of limit some risks that come with it. Again, bid and ask prices will widen when volatility spikes, but you can still get out of those positions. And so I just think overall short puts are just an incredible strategy because they're very simple for somebody to understand who's coming into it. Be like, hey, you're just betting that a stock will stay above this level, and you can kind of just understand that and put safeguards around it and make it easy to trade and kind of just base it off that.
Yep, I definitely agree. I do a lot of the similar trades. I typically go a little bit further out in DTE. Sometimes I'll go 120 days, even to
Okay.
180 days at times.
Oh wow.
Yeah, just because the difference in the current volatility
Yeah.
compared to the historical volatility is a bit greater when you go
Mhm.
further out in time. But obviously, you can make more if you're going in a shorter term. You have a little bit more theta to carry.
I mean, I see the potential for the 120 and longer days because you're less affected by the price of the stock moving. But I tend to say around 90 days for me. Yeah.
Yeah, perfectly fine. What would you say are some of the mistakes that we've made on our journey to stock trading, and what are a few things that you might have learned from it?
Yeah, so I've been trading for 8 years now. I've seen a lot of stuff. The 2018 pullback, the 2020 COVID crash, and through all those scenarios, I've never seen anything like Monday, like 2 Mondays ago. And so, man, I'm just learning a lot with each one of those experiences. 2020 taught me a lot. And that's just like, man, it's sometimes good to be contrarian when market's at all-time highs. And
Yeah.
I coming from a trend following background, so I'm like, okay, let's follow the trend. But in 2020, we had a very strong spike up. It was like 7, 8 days running of straight green days, and then we had that spike down. And so I was caught in there a bit. And so that's one thing I learned is like, okay, when we're dramatically pushing to new all-time highs, let's kind of layer back or take back some risk that we have on our accounts, and just kind of put on some hedges and understand that when the market is going up, our volatility is low, which means that we have a lot of risk as option sellers. And so I did that, so I've been controlling risk from that type of perspective, but I've never seen anything like Monday. Where I learned that volatility can spike like crazy, and it's less about knowing that the volatility can do that, and it's more about understanding how to control your buying power so that you can survive that. Because a 300% spike in a day is not sustainable. VIX will eventually come back down, and your positions will start to settle again. And so that's something you need to be able to hold through. But you can only hold through it if you keep your buying power in check and you have a good amount of long options with short options. And so that's something I'm learning. And that was I think for me this year was roughly a $19,000 loss on Monday from all my stops. I was up about 21,000 for the year, so I'm back down to break even. So again, it didn't hit me as bad as others, but still a huge learning experience there.
Yeah, definitely agree. I was in a similar situation. When the volatility was so low before, last or 2 Mondays ago, and it was seeming like, every type of naked put or 112 was working like charm and it's going to work forever. Obviously that didn't happen. And a few of the mistakes is if you see the overbought areas, if you're near all-time highs, if you look at RSI, it's like 90 for many weeks. Those are definitely times that you want to lower the amount of risk that you're putting in. Another thing that I'm noticing is when we're in those situations, and we're pretty much back in the situation in the end of August, volatility is back to like under 15, and we're near the all-time high again. You have to be okay with making a little bit less in these situations. And it's a little hard with the preconceived notion, like I want to be able to beat just buy and hold SPY, and that's what most people's goals are. But when the SPY is just shooting up like over and over again, just be okay just waiting it out, being on the semi sideline, so to speak. Like you're not
Mhm.
going to do absolutely nothing, but you're going to try to sell a very limited amount of your buying power. Just being able to have those situations ready when the volatility will eventually shoot up, so you can definitely take advantage. I remember
Yeah.
during volatility, I actually did add a 112 on that Monday when the market settled down, like near the middle
Mhm.
of the day. And I was just amazed how far out of the money you could go on them because the volatility was still in the
Yeah.
40s, 50s. And I was selling like 35, 3,600 puts when the market was like 5,500 and it was still
Dang.
getting a good return. So just being able to be ready for those situations are definitely helpful.
For sure. Yeah. I mean, like that's one thing I learned is again, I've only been trading futures options for maybe almost a year now. And I've always heard of, only use 50% of your buying power, which made sense to me. But having Monday happen and having access to the options auto trader, like I'm able to see the data of a lot of trades. And the people who held through their 112s, like those trades, like their buying power went up 200%. And so if you're at 50% usage, well, you're now at 150, type of usage. And so you're going way over. And so I'm kind of like adjusting, like if VIX is under 15, I'm going to only use like 25% of my account or something like that. And then if it's above, then I can slowly scale up. Again, I know Tasty Live already has metrics like this where they kind of break down what you can do with that. And I think that would be mighty fine for somebody to follow. And I would recommend that you base your buying power off of VIX just to kind of control against that risk.
Definitely agree. I actually updated my trading plan with a very similar idea. I have very set levels where the VIX is at a certain level. I'm going to use a certain amount of buying power.
Exactly.
It's within around 5 to 10%. Obviously,
Mhm.
it's not going to be exactly like to the percent at times.
Yeah.
And then you've both of us have helped many different traders. You see a lot of the data from your auto traders. I have a lot of members that have been sharing a lot of the trades that we do as well. What would you say some of the biggest mistakes that other traders make?
Yeah, so I know we keep hitting on this, but it's definitely the biggest one is over leveraging, putting too much of their money into one account. But also something else that I see is like this shiny objects syndrome. Is you see all these strategies on YouTube and option selling on futures, especially when we go 90, 120, 180 days out. It just takes a very long time for that trade to hit the profit target or to expire, whatever your strategy is. And so that takes time, and people don't like that time. Although it's a super consistent, super profitable strategy, people tend to move to a zero DTE strategy or day trading or something because they like that activity, and they're giving up a huge win rate and a lot of profit potential. And so I've seen people who have a 112 trade that they do, and then they try to have some activity by doing zero DTE, and then all their losses from zero DTE kind of flatten out their profits from 112. So first thing is buying power, and second is not sticking to it because they just don't have the patience. And so I would say those are the two biggest things that I'm seeing. Also, I know that I presented selling options as simple, right? You're just trying to stay above a certain level. You still want to understand more about what options are, how does volatility affect it? What is the delta and what exactly does that mean? I think people are jumping into it, and that's great, but they need to do more research on what exactly an option is. So I would say that's probably some of the biggest things that I'm seeing.
Yeah, I see that as well. When beginners are starting out, a lot of them are just making sure that I enter the trade in correctly. And
Yeah.
obviously, you got to make sure that you're putting in the right orders and your
Hmm.
stop losses
That's
and
yeah.
profits and all that. But then once they get to that intermediate type stage, they're ending up, over leveraging at times. I do see the shiny object syndrome quite a bit. I'm not
Hmm.
going to lie, I've seen that a little bit too. And I was close to 50% buying power right before the Monday anyway. So it did hurt a bit. But yeah, it's also being able to be very mechanical in your strategies,
Hmm.
seeing where the VIX is, seeing how much buying power you're using, being able to make your adjustments based on what you know you're going to do beforehand.
Yeah.
So if you're doing a trade, you should know beforehand exactly where you're going to try to get out for a profit or where you're going to get out for a stop loss. And I
Exactly.
see a lot of traders that are just making the trades. It might be working okay, and then they decide to just cut it because they like the profit for a certain amount of time. And then they'll enter a new trade because they want to just keep that ball rolling. And then at that point, of course, the market will turn and then they could get hurt. So
Yeah.
if you didn't do any of that and just stayed in the original trade that you had based on your trading plan, you probably would have been okay on that trade. But then suddenly they're stopping out on the new one because they did another short DTE trade. So
Yeah, for sure. I mean, I've seen that with people where like they don't understand that as options traders, I mean, as all traders in general, you're playing the numbers. And so if you start cutting your winners short, then you're screwing yourself in the long run for when that one loss comes, and now you don't have any profits to cover that loss. And so, yeah, definitely be very mechanical, know the plan before you get into any trade and stick to it.
right. What are some of your management techniques if a trade starts to go against you? Do you have a set stop loss usually on most of these?
Yeah, so most of these I do a set stop loss, but it also depends. Like if I'm doing a 1-1-2, because I know I have two short puts, which give me a lot of risk, I have a stop loss on that. But if I'm just doing a naked put, a super far out of the money naked put, then I'll typically run that a tasty trade style, as in 50% profit and 21% days until it expires, just because I have less risk. But I know with a 1-1-2, I do have a lot of downside risk, and so I do cap that. But yeah, so if I'm purely naked, I'll just hold it through and then keep my buying power small, or I'll do a 1-1-2 and have a stop on it.
Yeah, very similar to me on 1-1-2 strangles and whatnot. I have very set target stop loss
Mhm.
and profit taking.
Yeah.
I'm willing to, on a very small percent of my account, do like a covered strangle type strategy
Mhm.
where I'm okay getting a sign on an MES contract.
Yeah.
And I definitely wouldn't recommend this if you don't have, at least like 40 or $50,000 account.
Yeah.
But I'm okay taking the assignment, possibly losing $5 every point it drops, but then I'm
Yeah.
willing to be selling calls against it. Again, very small percent of my account, but I already know exactly what I'm going to do if I get a sign and then where I'm going
Mhm.
to my calls at. So I think
Yeah, for
that's one
sure.
of the keys, being able to know exactly what you're going to do beforehand and then following that plan and not just diverting from it because, ooh, this situation looks a little different. So
Mhm.
just being able to have that ready and then also adapting your trading plan as well. So especially with 2 weeks ago when the volatility shot up, definitely updated my trading plan because the new situation that happens, it could easily happen again at some point. You have to be
Mhm.
prepared for it at that point as well.
Definitely.
Yep. If you think you had like a certain blind spot, so to speak, if there's something that we still could work on, what would you say that would be at this point?
Yeah, so that's a very interesting question. When it comes to blind spot, I think one of my issues was, and I'm still trying to work through it. I know it, but I don't like know it, is the idea that win rate isn't everything. I know like for most of my life, and I'm really just starting to learn this, is that a high win rate doesn't mean you have a super great strategy. You have to look at what is my loss amount, what is my win amount. If I multiply them by the win rate, that's going to give me my actual return. And so I definitely a lot of times even still accidentally or tend to overemphasize a high win rate instead of one that can give me enough credit to properly offset losses. And
Yeah.
so maybe moving from a 99% win rate to a 90% win rate, just a 9% difference can help kind of cushion the change between a loss amount and a win amount. And so that's definitely something that I have to keep in mind, and something that I'm working on recently.
Yeah, as well. I am fiddling around with a little bit higher deltas than I'm normally using, but I am doing that with defined risk, doing broken butterflies at a higher
Mhm.
delta or still a higher delta on different commodities like gold and oil and whatnot, but
Yeah.
going with the same stop loss percentages and just being okay that if you do get stopped out, making sure it's a very small amount of your total account.
Hmm.
I used to
That's
have it
true.
as I used to have it as a 3% of my net liquidating value, but I'm going to lower it to around 2%, I think,
Yeah.
just because you want to be able to stay in the game, especially when that
Hmm.
like Tyson uppercut comes. You got to make sure that you stay in
Yeah,
there and have some account size at that point. Um,
for sure. Yeah.
how would you say has your trading evolved over time? We did talk about that a little bit with your spreads to futures and whatnot, but in terms of where you are now, how do you say it has evolved?
Yeah. So I'm still Very much a trend follower where like that's where I kind of got my original trading skills at. And so I do love looking at that, but I will say now something that I do a lot more that I never did, because when you're trading stocks, you have to be very precise on your entry, because you know you can only make money from where you buy in. And so I would have to wait for an uptrending market after it pulls back. I would have to wait for it to start to curve back down and go up before I get in. But now something that I'm doing is like, hey, like if we're going to define uptrend and we start to pull back, like entering on red days has been something that like I'm evolving to do. And it's not like mechanically it's an easy thing to say, but emotionally is a hard thing to do. Because you know you're like, oh man, how much further can it go down? And you get in, and then you're going to immediately see some losses. But like you mentioned, when you enter on red days for options, like you get to go way further out, making the trade safer. You collect more credit, more premium, and you basically just eliminate a lot of risk because you're getting in at a high volatility point. So as volatility shrinks, you're going to take advantage of it. So mechanically speaking, it's the right move, and so that's something that I've been working on. It's also why I created the Option Autotrader to help it be more mechanical, to help remove those emotions.
Yeah, that's a good point. Have you ever read the book Trading in the Zone by Mark
Oh
Douglas?
yeah, yes, I love that book. It's
It's a
good.
great book. I read it about every year or so, just to make sure that I understand
I don't
more.
think I've ever read it, sadly. Like I mean, like there's an audiobook on YouTube,
Yeah.
and then that's how I listen to it.
Yeah, the four-part series, it's like 5 hours long.
Yeah.
That's pretty much the book already.
Yeah.
What I like about that book is to show that you need to be very mechanical in your trades. Again, knowing exactly when you're going to get in, get out of the trade, and then just following it, just being perfectly okay with, whatever happens, happens. And be willing to take a lot of those losses. Although we're doing very highly probable trades that are going to work
Mhm.
out, there's a very small chance that multiple of them won't work, and just being okay with that and noticing from the results. But one of the main things about the book is, again, being mechanical about it. And one of the reasons why I wanted to talk with you is you've made an auto trader that actually will be very mechanical based on what your entry and exit rules are. And that's why I definitely was interested in seeing a little bit about your auto trader. So if you wouldn't mind, you can share your screen if you want to show a little bit about how your auto trader works.
Yeah, sure. I would love to do that. Yeah, so I mean, I originally created this auto trader because I was like, wow, option selling is awesome. And like I can do it, but I don't think my wife would ever do it.
Yeah.
And I was like, man, I know this might sound bad, but I was like, man, if I were to die, like I would still want my wife to take advantage of like this income from options. And so that's kind of why I built it. I was like, I can have these things running, producing money that she can take advantage of even if I'm not here. But anyways, yeah, so it's very simple. Again, it's just a dashboard that kind of shows you an overview of things, but each thing is an auto trader. And so an auto trader is just your automated approach, or you can call it a bot, whatever it is. Essentially, it's the rules that you currently trade with now, and it just follows it for you. So there's no emotions involved. There's no waiting, no like, hey, I was in a meeting and I missed the stop at some time, something like that. And so again, I'm going to create a 1-1-2 trade. Again, you can do basically any option selling strategy you want. You can sell puts, you can sell calls, 1-1-1, 1-1-2s, right? All this thing, sell strangles, all the strategies we were just discussing. Actually, let's set up a strategy that you do, right? You do the 1-1-2-2, right?
Yeah.
Yeah. So we can do a 1-1-2-2 strategy. And so just like this, now we get to structure the trade. How do we actually want to enter every time? And so the first thing is, let's pick our symbol, right? If you're doing a smaller account, maybe MES, larger, you can do ES depending on what you're doing. I'll just keep it on MES for now. 90 DTE, whatever duration you want, you just structure it as you trade now. So I know for you, we can bump it out to like 120, something like that. And then we can structure the trade here. So by default, it's giving us a delta here. So if you don't know a 1-1-2 trade structure, it's a 1-1-2, but we're defining our risk on the end. And so that means we're going to buy an option, sell two, and then buy two. And so what are your levels for doing this, Lance?
I have a few different ones. One of the main ones I do, I'm gonna buy around a 0.14 delta. So the
Okay.
first one will be around 0.14.
Oh, the
On the
first
top.
one,
Yeah,
about around the
14.
14.
And then the put debit spread, I'll go around 9 delta on that second one.
Okay.
And then for the 2-2, I typically go around 6 delta on the sold puts, and then about 2 delta on the bought puts. Yeah.
Yeah, so you can structure this. Obviously, this is how you do it, Lance. But but like if you're someone who also likes doing dollar distance away, you're like, okay, I like to enter my debit spread as like a $50 wide. Well, then you can do a strike offset of $50 wide, and you can change that to whatever distance you want from this. And so yeah, so you can structure this however you currently trade. And so yeah, we'll just structure it like this for this example. Next we define, okay, how often do we actually want to enter this trade? So we can do it once a week, multiple times a week, things like that. I'll just leave it on once a week for Wednesday for this example. And then this is where the fun part gets in. We were just discussing of like how red days give you better entries. And so you can prioritize red days by just enabling this. And now anytime there's a red day, you'll be able to enter that trade and things like that. So yeah, and even for people who I know most of us option sellers are very mechanical. We just do the same thing. But there's also a lot of traders who like using charts. And so we have a trading view integration where you can make any advanced entry criteria enter, but we'll just leave that for now. And then it comes down to, okay, so we picked our strategy, we structured the trade. We're now going to be able to get into it and the frequency that we want. Now, how do we exit this trade? How do we want it to manage that? And so again, we have our typical take profit, our stop loss, our early management in days. So like if I want to close it in 21 days, what are your rules for this about?
Would it be the total initial credit, and then you do a percent of that?
Yeah,
I'll typically go around 90% because I just leave it
90%
there
on,
for one
on
time.
initial
And
credit.
then my stop loss is typically it would be 300%, which would end up being a 2x loss, right?
Okay, yeah. Self-determined.
Um,
Yeah,
oh,
because
it's a
it,
percent. Yeah, it'll be 200% loss. Yeah.
yeah, so that, and then because I'm a 1-1-2 trader, and a 1-1-2-2 is basically a 1-1-2 trade, is I love that as a 1-1-2 trader, we can turn these trades into hedges. And so I made this platform have the ability to do that. So if you want to turn it into a put debit spread hedge, if you want to put it into a ratio hedge, which is closing the long put, the short put of the put debit spread, things like that. You can have it automatically do that once your take profit percentage has been hit. And so that's awesome.
Yeah, I'll do it the same way. Just keep it as a PDS hedge at 90%.
Exactly. Next is buying power allocation, just a fancy word for how much money do you want to allow this to trade with. If you have, let's say $100,000 in your account, but you only want to put 10% to the 1-1-2 strategy, that'd be about $10,000 that you would allow this auto trader to trade up to with. Again, each trade will be about 500 or so, since we're trading MES on this. There's also a ton of other safeguards, and this was just recently added. Most of these safeguards have been here, but this one, enable VIX-based buying power allocation. I think this is very important. This was added because of Monday. Casey Live, if VIX is between these levels, your buying power should stay at this amount. So for instance, if it's above 40, it's like you can go up to 50%. If it's under 15, stay around, what was it, like 20? I forget exactly what the numbers were. Actually, I can just enable it and it'll show me. So now I can do this automatically. So I don't have to worry about, okay, where's VIX? And I am adjusting it myself. Now if VIX is above 40, it'll use the $10,000. If VIX is between 30 and 40, it will only use 8,000 to trade with. If it's between 20 and 30, it'll only use 7, and 15 and 20, it'll use 6,000. If it's below 15, it'll only use 5,000. So now I can automatically manage my buying power usage per trade based on VIX without having to do anything. And so, this auto trader, the whole goal is to make it be mechanical and seamless. And so, yeah, go ahead.
Question there. Let's say you're using about $5,000 of your 10,000, and then the VIX goes up. It would just turn it off at that point, because let's say you're above those enabled VIX allocations.
Yeah. So if putting on a new trade would exceed your buying power limit based on this, then it won't enter the trade. Yeah. So basically shut off all new entries. Yeah.
Very cool.
Yeah. And then just like that, it just kind of gives you a summary of like what this trade is, your approximate metrics, so that you can understand what you're looking at, how all these settings you just set translates into English, just so you can confirm, okay, this is what I want my bot to do, because this isn't some black box or weird algo AI thing. This is your rules, your systems. So this is just confirming, hey, do you know the rules that you set? And then you can confirm it and set it live, and then it'll just follow your rules, and you can turn it off, turn it on, and manage it from there. And so, yeah, that's how simple it is to automate an option selling strategy. And this is the only platform that allows option selling on futures. And so I think it's incredible.
Very good. And you're able to do multiple ones, right? Like if you want to use a
Yeah.
certain amount for one and a certain amount for another.
Yeah, for sure. Yeah, and there's also a paper trading account feature. So you can paper trade and test all these strategies before you actually set them live. Maybe you back tested them and now you kind of want to forward test it. Well, you can paper trade them and then move them into your live account. Yeah, so you can see here I've won, but I can make it as many as I want here. If I want to do a 1-1-2 trade, maybe a strangle, maybe diversify my strategies and assets, I can do that as well.
Yep. So if members are interested in actually joining this auto trader, are you able to set it up where I have specific parameters and then others could actually follow the ones that I use?
Yeah. So if you, Lance, want to share your strategies with others, you can actually do that. So you can either share your auto trader, or as someone who has a link to share this with people, if someone signs up through your link, they can actually get access to any templates you want to give them. And so, yeah, that's custom for them. Again, we have some templates by default. We just went through creating the process, but we can pick an auto trader. And so, we show you just some top ones based on Tasty Trade metrics, data, things like that. But if you're coming through Lance's link, then he can actually share his templates with you. And so you can just one-click install all the rules and settings for you.
Very interesting. This is definitely going to help out a lot of my members and other members that would be interested in being very more sort of mechanical and not putting all that emotion into play there.
Definitely.
Really interesting. All right. So Austin, this was a great service. You're a computer programmer, I assume, but
yes, I am.
Right? Yeah. I can't do any of this stuff besides back in the 80s, I used BASIC on a Commodore 64, and you have to write 10 question mark, and that's all I remember. But,
oh man, I've never touched BASIC, so good on you.
very, very impressed being able to actually make this. This seems like it was a bit trickier. Maybe for you, it wasn't as hard as it seems, but for others,
it's 9 months in the making and still getting better every day. Yeah.
All right, sounds great. Anything else you'd like to share with the audience that are watching this at this point?
Yeah, so whether you use an auto trader or not, as we've been discussing, just option selling is amazing. Just be mechanical with it, have rules, and follow them.
Yep, definitely agree. Well, also, it was great speaking with you. And,
yeah, thank you so much for inviting me on. I loved hearing more about your story and loved being able to talk.
All right, sounds great. If any of you guys are interested, if you click on the link in the description down below, you'll have access to my settings on the auto trader, and you could easily change them to whatever settings that suit your needs. All right, also, it was great talking with you, and have a good rest of the day.
See ya.